Hello guys, welcome to our new YouTube video. In this video we are going to break down what is fair value gap, how you can use a fair value gap concept in your trading and increase your profitability. And before that, if you are new in this channel, just subscribe and share to your trader friends, and we can go to this video. What is fair value gap? Fair value gap is a trading imbalance price action where market moves aggressively in one direction, leaving a gap between weak and constructive candle. This typically occurs where there is a higher volatility offered driven by institutional activity, which basically means fair value gap means three formation candle which leave a gap between a middle candle within this first week. Just you can see there is a one candle, two candle, three candle that shows us fair value gap. That's why this three candle formation is called fair value gap, leaving a gap between middle candle is called fair value gap, which basically means leaving a candle which basically occurs because of high volatility and leaving gap because of high volatility and institutional activities. That's a traders who trades $1 million, like institutional traders. They leave orders left there, and which basically create a huge imbalance. And price go to this imbalance, price will where price may return to before condition. You can see this was in a bearish trend, and price was going to the Fiji and continues this trend. That's what basically fair value gap do. Fair value gap form. How to identify fair value gap? As I said, there are three candle formation which basically leave a gap between the middle candle when the price return to their middle gap, which will continue the trend, which basically means price coming to that FEG because of to rebalance that imbalance and continues the trend again. A large candle appears within a little to no weeks on one side. We can see there is this two first weekend first candle and last candle weeks were not intimating, which creating a gap. That's how FEGs form. That candle wicks was not intimating and leaving a gap between the middle candle. That's how fair value gap is formed. That the middle candle wick does not fully overlap with the previous candle and next candle wicks. That's how I said. That's not leaving intimating or not overlapping the previous candle wicks. That's how the fair value gap form. And we can look what is bullish fair value gap. Bullish fair value gap means as I said, three candle formation creating a huge gap between middle candle, which basically means if you want to buy in a bullish trend, do not buy from here. Buy from here, from this FEG. When price come to here, there is a higher chance to price return or price continue the trend. That's a higher chance. When do not buy from here, buy from this imbalance, because there is a higher chance to price return to the continuous trend. Okay, that's a higher chance. Okay, that's why in bullish fair value gap, buy from the FEG, which could go continues the trend. Bullish FEG act as a support. Price may drop into the gap, get brought up and continues upward. Just like as I said in upward, when price come to this imbalance, the price will continue upward the trend, which basically means buy from here and stop above this low of candle, low of wick, or this low of candle. It's up to you, but don't buy from this area, buy from this area. We could I will show the real lifetime chart analysis, and we can also look bearish fair value gap. Bearish fair value gap, it's in bullish. When the price come to here, we will buy from this imbalance and target the next candle high or week, anything like that. In bearish, when price come to this imbalance, price will create price will go back down, which will act as a resistance. In bullish, price act as a support. In bearish, it act as a resistance. Bearish act as a resistance. Price may rise into the gap, face selling pressure, and continues downward. When price was making a high down movement and suddenly make a high momentum and getting tap into this imbalance, and after tapping into this imbalance, getting rejection and moving downwards, which basically this imbalance called fair value gap. How to use fair value gap? As I said, as a support and resistance. Price may return to the fill gap and continue to original direction. In bearish, when price come to this FEG, it will go down, which basically act as a resistance. In bullish, it acts as a support. When price come to there, it act as support and move to continuous direction. Entry point. Traders often use you can use the FEG as a reversal or continuation point. You can enter from this area for sell and put your SL above this high or anything. It's up to you. Liquidity. Institution may push price into gap before making the move. If the institution want to move the market, institution cannot order a huge million. They are placing a huge million orders, but they can place within one order. They will create a order here like this. That why this imbalance is formed, because if they need, they will put a limit order here, because they need that money to trigger and move downward, which basically means institution traders move the market, which trap the retail traders, and when the price comes to this fair value gap, price will move to downward. I hope you understand. We can move to a chart to give the examples. Okay, the price was making higher and higher low, and this bullish fair value gap got disrespected, and which basically show that the price is going to make a lower low and lower. This we can look for. Let's just like this fair value gap, the bearish fair value gap get respected. You can see this fair value gap got respected and moved down, and after that you can see this fair value gap also got respected, and which basically moved downward. You can also just keep in mind, just when the market is making higher and higher low, and there's a bullish fair value gap and got disrespected by the bearish candle, and also form a bearish FEG, which basically show that market is going to downward, market is not going bullish anymore, which basically show that market will move downward. Okay, keep in mind that there's a higher chance for going down. Let's see this fair value gap to get respected, bearish fair value. If this bearish fair value gap get respected, there's a higher chance to get upward. I think this bearish candle can fair value gap can get respected, because this is in discount premium area. Let's see which one will get respected. You can see this fair value gap get respected. I think this is a liquidity, acting as a liquidity. There's a high chance to come here and just go downward. Let's see, there is a fair value gap here again. Let's see, it will can get respected. Yes, it did get respected from here. You can see when just a little tap and got expected. Let's see the market come to this area and getting respected. We can see another FEG is also formed here, and that also got respected. And we can see another bearish fair value gap is also formed. Let's see if we can get respected by this. Okay, we got disrespected by this fair value gap. Also we got a if we get the candle close above, just we can look for buy. Okay, we got another just closer above, and we got a bullish fair value gap also intimated that. Let's see if the if also we can see another fair value gap also formed here. If the price come to here and getting respected this fair value gap, we can look for buy. But price continuously go upward because this fair value gap was intimated. You can see this, maybe this fair value gap may get intimated. You can see this fair value gap, this bearish fair value gap. As I said, if this bullish fair value gap is get disrespected, there is a high chance to market go downward and grab the liquidity. You can see market when come to this bearish candle got respected and just gone for this near next liquidity, and there is a fair value gap here and gone upward. And we can see we can also here also formed another fair value gap and tap here and gone upward. That's higher probably. And also we got another fair value gap, bullish fair value gap. Market is going bullish side. We also got a break above here. There's a higher probability go to upward. Okay, market disrespected here, and bearish fair value gap is respecting. We can see market just consolidate. If the market is consolidating, don't trade in that day or that session. Just go wait for to get the displacement. We got a bearish FEG here. Let's see it's get respected. No, it's not get respected, disrespected. And we got another fair value gap here also. In order that there is a price just move above, and this bullish fair value gap got respected. If you can understand which fair value gap is get respected and disrespected, you can also understand the daily bias, and you can just look for the day where the bias is going down, bearish or bullish. Just you can analyze up to by using this fair value gap concept. You can see this bullish fair value gap got disrespected, and there is a bearish fair value gap. With the let's see the market respected. Okay, that's a market is going downward, and you can see this fair value gap also got respected and moved downward, and price come to this fair value gap again. Let's see the price can go higher. If this bearish fair value get disrespected, there is a higher chance to get upward momentum. Okay, this bearish fair value is getting respected. You can see bullish fair value got respected. If you can understand this fair value gap, and you can understand the daily bias. Okay, I hope you understand the fair value gap concept. Okay, last one more example we can look for. We got a fair value gap here. Let's see which one will get respected. There is no clear formation here. We got enough fair value gap here. There is a higher probability to get respected. Okay, price come to this fair value gap area and got respected and move upward. You can see price tap to fair value gap and move upward. I hope you understand this fair value gap concept. If you need more videos like this, and I will put more videos like ICT concept, SMT divergence, and lots of videos I will put in upcoming days. And I need your support. Just if you need a free signal group link, I will put the signal group link in description. You can go there. You will get a free VIP signal group there. I hope you enjoyed this video, and I hope you understand fair value gap concept. If you don't understand, just watch again, and if you don't understand after watching, just comment down. I will improve my talking skills. And and don't forget to share to your friends. And if you are a beginner trader, just be consistent and be disciplined in this trading industry. And I hope you understand the fair value accounting concept, and see you in next video.